Your voice is breaking actually.
Am I audible now? Is it better now?
Yeah, that's fine now. Yeah.
Okay. Just give me a second. I'll just change my network too.
Well, it's fine now actually.
Fine now. Perfect. Okay. Okay.
Yeah.
So finally, the longer wait is over. And am I audible to all? Is my voice breaking? Just give me a second. I'll just shift to a stronger network.
Both actually.
Yeah. It should be better now. It's better now.
Yeah.
Yeah. Great.
Yeah, you're audible now. Yeah.
Thank you guys. Thank you guys for the confirmation. Thank you, Srikant. Okay, so finally the wait is over. We have our one of the top CMT trainers of India today to teach you for this session, because Srikant, the thing is, the people into my curriculum of investment banking, like we're going to through this curriculum of financial modeling, valuations, preparing equity research reports, they really want to understand the technical component of that, right? They want to understand basically what type of tools we can use as a part of the research report, right? How to have the buy and sell target in the equity research reports, and various other kind of parameters which help them to make up their equity research reports. And over the past few months, they have been really like, I would say, bothering me to get someone, a technical expert into the field of finance, who can just guide everyone into this field, and they can just make the best use of the knowledge. So thank you so much, Srikant. So just to have a brief introduction of sir. So again, he's a CMT level 3 cleared, right? So there were like multiple candidates who were there with me, like wanted to start their career into CMT, right? So if you have any other questions regarding the CMT curriculum, how to clear that, what are the different parameters to keep in mind, you guys can feel free to ask him. Like maybe after the session in the Q&A, you guys can connect with him on LinkedIn. I will be just sharing his LinkedIn platform links as well. Feel free to ping him. He's a full-time derivative trader and a trainer. He's also a consultant in the stock market. And he has worked into multiple firms like NatWest Markets and Royal Bank of Scotland, into the Kotak Securities as well, into the Kavi stockbroking and Cognizant too. So his experience into trading, I would say, is immense. He has been working into multiple organizations. He has been a full-time self-trader also and guiding multiple students all around. So I can fully guarantee that his experience will really help you to increase your knowledge into this field. It won't be just for the part of the research report. He shall be covering wide variety of topics and helping you understand these topics in a very great way, right? Because he has been into these fields for many years now. So I can guarantee that apart from that equity research ka topic for technical portion, the guys shall be learning 1,000 times much better things, right? And surely in future, we shall be coming up with much more collaborations and sessions for all of you, so that you guys can also have a technical aspect apart from just having a fundamental aspect. So thank you so much, Srikant, for being here. We're so excited for the session. The stage is all yours. Thank you so much.
Thank you so much, Maurya. Thank you for this wonderful opportunity. And yeah, uh, nice to see so many people even on a Saturday evening actually. So I would share my screen right away. Okay. Okay. Before I start sharing my screen, just wanted to know if any of you have heard of technical analysis before, or is it the first time, or you know something about it at least? Or is it the first time that you are hearing about technical analysis? I'm sure many of you would have heard of technical analysis, but maybe not in detail, maybe not have delved into the business of technical analysis. But is it something very new to you? That is the first thing I just wanted to know. Like any of you who have ever have you ever practiced technical analysis in your past? Anyone? I mean, it's something for everyone. Okay, no problem. Okay, no problem. let's start with the session. I'll share my screen with you guys. Okay. Just let me know if you are able to see my screen.
Yeah, it's visible.
Thanks. So, yeah. So let's start with the topic. What is technical analysis? Just 1 second. Yeah. So first thing that we will be discussing is what is technical analysis. So as you see on the screen, technical analysis is a method used in financial markets to predict future security prices by analyzing historical market data, primarily focusing on price and volume trends. This method is based on the idea that past price behaviors and market trends can repeat, allowing traders and investors to make informed decisions. So in a nutshell, what is technical analysis? It's a method to forecast future prices of a particular security, okay, which helps a trader to make informed decisions. All good? Am I audible, guys?
Yes, sir.
Okay, thank you so much. So the next thing is, how different is technical analysis from fundamental analysis? I'm sure all of you are into the fundamental side of the markets. So let's try to discern the differences between fundamental and technical analysis. So in contrast to fundamental analysis, which evaluates a company's financial well-being and intrinsic worth, technical analysis instead depends on charts, graphs, and a variety of technical indicators to discern patterns and trends that may suggest upcoming price action. So what basically our fundamental analyst would do is basically look into price. I'm just giving few examples. Look into price to book, price to equity, would look into the balance sheet accounts and profit and loss accounts and a lot of those stuff. But a technical analyst is basically interested in what he sees in the charts, the graphs, and the indicators, which will help him in identifying and forecasting the future price of a particular security. It could be a security, it could be a commodity, it could be any asset class for that for that reason. It could be gold. If you are interested in a particular asset, you could actually use technical analysis to identify the future price action. Okay, that is how you become a good investor. Okay, so a technical analyst would actually buy at a lower price and sell at a higher price. And when he thinks that the price is overvalued based on his indicators and price action stuff, he would actually sell and then buy it, which we call as short selling. Okay, so I want to be very basic on this right now. Third thing, what is a major? Let's discuss the major assumption of technical analysis. One major assumption of technical analysis is that markets travel in trends. And what are trends? Trends are the outcome of interaction between supply and demand. Okay. So what is supply? People selling in the market. And what is demand? People buying in the market. So if there is a demand for a particular product, the price goes up. And if there is no demand for a particular product, or if the demand is decreasing for a particular product, you see a supply in the market. So the job of a technical analyst is to identify these trends in order to make informed decisions. Okay. So understanding these trends are essential for making any informed decision, which will help you in your investment goals. Right, guys? All okay?
Yes, sir.
Fine.
Yes, sir.
Yeah. So good. So understanding there are three types of trends basically in the stock market, which a technical analyst will basically look into. Okay. Categorized by the direction and the duration, which is actually very important and crucial for successful trading. Okay. The three kinds of trends are uptrend, downtrend, and a sideways trend. So what is an uptrend? Let's discuss what is an uptrend here. This trend is defined by a consistent rise in stock prices over time, marked by higher highs and higher lows, indicating a positive market sentiment, and investors capitalize on increasing prices during uptrends. Okay, so this is a chart of an uptrend where you see this is a line chart. We will discuss about different types of charts in the next few slides. So let's discuss the price action here. You see this, the price of this particular security. Assume this is a securities chart and this is a line chart. You see here the price is actually moving up, coming down, moving up, making a new high, coming down, But if you see, when it comes down, it is not breaking the previous lows, and it's consistently making a new high and consistently making a higher high. Higher high and higher low is a characteristic of an uptrend. Okay. So you see here the points, it's making a high, it's making a higher high. Again, it's making a new high. Yeah. I'm sorry. Did someone ask anything? Okay. I hope my audio, my voice is audible, right?
Yes, sir.
Okay. Thank you so much. So this is what we call as an uptrend. So technical analyst would take the benefit of knowing the trend and buying at some points which he feels is according to the trend. Okay, and make the best out of the understanding that he has in the markets. So second thing is the downtrend. This trend is characterized by a general decline in stock prices with lower highs and lower lows, reflecting a negative market sentiment. Investors may sell or engage in short selling during downtrends to minimize losses or profits from falling prices. So in this chart, which is again a line chart, you see the price is actually moving up, hitting a ceiling, coming down, again hitting a ceiling. And this point, when it hits the ceiling, it is actually lesser than the previous highs. Okay. Divyesh, can you actually unmute, please?
अनम्यूट नहीं म्यूट होता है वो
Sorry, mute. Yeah. Divyesh, please mute yourself. Yeah. Okay. So यहाँ पे if you see the price is actually moving up, coming down, again moving up, but this time it is characterized by a lower high and a lower low. Lower high is the price is moving up, hitting a ceiling, not breaking the previous high, and because it is not able to break the previous high, it is actually falling further. Okay, so that means that the sellers are active at these levels, and what you see here is a downward sloping trend line. Okay, so technical analyst is aware of these trend lines. He would take the advantage of selling at this point and considering that the prices will not break the high of above this level and further fall. So this is what basically short sellers or people who realize at the early stage of a downtrend that they have to sell stocks because the price is actually falling, they would sell at a particular point. Because normally what happens is a lot of retail traders, they are not aware when the markets are going to crash, when the markets are actually crashing, and when the markets will actually hit the floor. Okay. So technical analyst job is to identify these trends, make the best of the opportunities to exit in the markets as well. Okay. So if you had a stock at a particular level and the trend has actually come down, would you wait? If you have bought a stock at 500, would you actually wait for the stock to come to 100 and then sell it off? No. What you would do is you would actually identify the trend and sell at a particular point so that you don't lose the capital that you have in the market. So this is what we call as the downward trend. And this is a downsloping channel that we call. Okay. Next one is the sideways trend. In this trend, stock prices move with a horizontal range, showing minimum upward overall movement and a downward movement. It signifies a consolidation phase where the market is undecided. Traders often seek breakout opportunities when price move beyond this range. Okay, so let's try to understand this in detail. So what happens in this trend is market is actually the price of this particular security is moving up. Suppose if this is 50 and this is 100, security price is moving from 50 to 100. It's hitting a ceiling, coming to the floor, 50, bouncing back, coming down, coming up, and it is oscillating between a particular range, 50 and 100. Okay. So इसमें क्या होता है कि market is actually in a congestion phase. So the buyer is not able to make money out of it, and the seller is not actually able to make money out of this. It's only the traders who know that this is a particular range in the market, they'll actually be able to make money out of this. Okay. And traders will actually wait for a breakout or a breakdown above this point. So if the price in this chart, you see that the price is actually moving below the support level. This is called as a support, which I also called as a floor, and this is a ceiling. Price breaks below the support. What traders would do at this point is they will consider this as a bearish signal, a sell signal. Okay, and this is how they would trade this sideways trend. Okay. Now, guys, is all okay? You guys are good with the understanding of whatever I have spoken till now, and is my speed okay? I just want to know that before we move on to the further slides.
Yes, sir.
Yes,
What happened?
sir.
I'm sorry.
Yes, sir.
Voice is not clear.
Is all good? Is it
Am I
the
audible?
same for everyone? Yeah, you are audible. Yeah. Anurag, can you mute yourself? Anurag, can you mute yourself, please? Thank you, guys. So is it audible for everyone? Is it, I mean, unclear for everyone? I just wanted to know that before I go on to the next slides.
So you are audible, sir.
Thank you so
Yes,
much.
sir.
Thank
You
so
are
much.
audible and clear.
Thank you so much, Vikram. Okay, so next, let's move on to the next slide. Let's move on to different types of charting tools that the technical traders actually use. And charts are the traditional tool of technical analysts to summarize price action.
I just
Okay,
want to ask that are you able to share this PPT to us after this lectures?
Yeah, I'll definitely discuss that with Maurya, sir. And based on that, I can decide whether I can share this PPT or not. Okay, thank you. So the next thing is introduction to charts. Charts are traditional tools of technical analysis to summarize price action. There are three types of charts. Karthik, can you mute yourself, please? Guys, please mute yourself for the next 1.5 hours. Guys, thank you. Okay. So there are three types of charts which technical analysts will use. One is the line chart. The second one is a candlestick chart. This one, the third one is a candlestick, and the second one is a bar chart. So the most popular charting tool among the technical traders is the candlestick chart. Okay, so we will restrict ourselves to the candlestick charts in this session today. Okay, because it is the most popular one. It is a more modern way of using technical analysis, and it is more friendly, easy to understand. A lot of characteristics about a candlestick chart, very easy to understand, and it has reliable signals as well for a technical analyst. So we will basically be studying about the construction and classification of Japanese candlestick formations. Why we call it as Japanese candlestick formations is because these candlesticks were invented by the Japanese. Okay. And now the construction of this chart. The construction is how these are formed actually. So Japanese candlesticks are constructed using the open, high, low, and close data of the security. Okay. So if you see in the screen, you see a green candle. This is called as the bullish candle. And this is a red candle, which is called as a bearish candle. Okay. And you would ask me, sir, why do you have white and blue here? Okay. These are traditional ways of representing the candlestick colors. These are traditional colors, white and blue, which you would find in some different, I mean, an old application or old software or any books, okay, which were published in a long time back. So you should not be surprised when you see white and black. Okay. So there were some books published in maybe early 2000s where white and black was the trending color that time. So that is when these colors were used. And some people still have charting tools where they put white and black as their preferred color combination. Okay. So here, as I said before this, the candlestick patterns construction is based on open, high, low, and close data. Okay. And red and green are the modern way of representing these candles. So if you see this green candle, okay, the boxed up real area is called as a real body. what I mean by boxed up area is the colored part. The green colored part of this candlestick is called as a real body. Okay, the green portion here is a real body. The red color portion is a real body, right? And real bodies may be green or red. As I said, even white or black in color, depending on the trading software that you may use. The real body represents open and the close range of the security. Okay. So in the green candle, the difference between the green and the red candle is in the green candle, the closing price of the security is greater than the opening price. Okay, so if a security has opened at like 50 rupees, Reliance Industries, let's assume Reliance Industries is at 500 rupees, example. The stock has opened at 500 rupees. And at the day of the close, it has closed at 550. So it has actually traded above the open price. So you might see a green candle on that day. You will see a green candle on that day. Okay, if the price is above the open price. Other way around, on a particular day, if any particular stock XYZ opens at 1000 rupees and closes at 950, you will see a red candle. Okay. What that means is the price has closed lower than the open price. Okay. So this is how we construct a candlestick chart. And the price beyond the open and close is called as the upper lower wick, or the shadow indicates the high and the low. So the point beyond this real body is called as the shadow, or the lower wick or the upper wick. The lower wick is this point, the upper wick is this, and this is also called as a shadow. So this is the highest point of the day, and this is the lowest point of the day. Okay, all good? Yeah.
Yes, sir.
Thank you, Ria. So next thing is, candlestick patterns are further divided into two categories: reversal patterns and continuation patterns. So reversal pattern signals a potential change in the trend direction, indicating that the current trend may be losing momentum and could reverse. And the continuation pattern suggests that the current trend will likely continue after a brief consolidation phase or a pause. These patterns help traders identify potential entry points in the trend's direction. So let's understand what do we mean by reversal patterns and continuation patterns. So candlesticks are best utilized to understand reversals in the markets and continuation structures whenever there is an uptrend or a downtrend going on. So what do we mean by reversal? If a particular stock has moved from 500 to 1000 linearly in an uptrend, a candlestick pattern which is bearish will signal a reversal. So there are patterns in candlesticks which help you identify whether that the stock price will start to descend from this particular level and fall from the particular level. So this is the power of candlesticks. And continuation patterns, these are patterns that will help you basically in an uptrend or a downtrend. What happens is an uptrend cannot happen very in a straightforward way. Okay, it has to move up, like there has to be a counter move, then it has to move up, like I showed you in the beginning, right? That the uptrend is happening, but it is making a lower high when it is an uptrend, higher high, I'm sorry, when it is an uptrend, then it moves, that's a counter move. Okay, then it moves up, then it slightly comes down. So the candlestick patterns have the power of identifying the consolidation phases as well. Okay, so these are basically congestion phases where traders might take a breather from whatever positions they have. They might book profits. Some traders who have not entered a particular trend might have an opportunity to enter in this particular trend, okay, in this particular phase. So now let us understand in candlesticks, there are a lot of different patterns. This session, we will restrict only to restricted few number. We have a lot of patterns in candlesticks, reversals and continuations. We have single candlesticks. We have two candlesticks. We have three pattern candlesticks. Okay, so now what we will restrict ourselves is to a few important, few candlestick patterns here. One of them being the ascending triangle pattern. So here I have put two charts. Okay, one is a line chart and one is a candlestick chart. Both have the same characteristics. So how we will read this chart is, one is the characteristic of this particular pattern. Second is how to identify the target of this particular pattern. Okay. So if you see here, as I said, we have two charts here. Both have the same characteristic. The only difference is this is a line chart and this is a candlestick chart. Okay. So ascending triangle, the characteristic is it usually happens in an uptrend. Okay. Uptrend is what we discussed in the beginning, a combination of higher highs and higher lows. And ascending triangle, if you see here, this is basically a continuation pattern in an uptrend. Okay. So basically, if you see here, the price is actually moving up, coming down, going up, coming down, going up. It is making a low, higher high. But if you see here, the high swing high is roughly around the same level. Okay. So what happens here is, because highs are roughly around the same level, the trader would actually wait for a breakout above this particular point. This level is called as the horizontal resistance, and this slope is called as the upsloping trend line. Okay, upsloping trend line and the horizontal resistance. So a trader would eventually wait for a breakout. And how do we calculate the breakout? Is based on the volumes that are happening at this level, and the if the price is moving above this, consistently trading above this level, you consider that this pattern has actually broken out. Okay. And how do you identify the target of this particular ascending triangle? What do you do is you take the highest point of this triangle here and to the base level here, the highest point from this to this, and move this to here. Okay. So if this horizontal resistance is like 100, assuming this point is 100 and this point is 45. So what we do is we subtract this value, 100 minus 45 is 55. Okay. And we add 55 from this point. So your target will be 155. Okay. So as I said, horizontal resistance is 100. The highest point of this horizontal resistance is 100 and this point is 45. The difference between this two is 55, and you add this to this particular horizontal resistance is how you get the target. Okay. So now your target is 155 based on ascending triangles. You can find these patterns in the stock markets in any asset class, irrespective of any markets. Okay. And these technical analysis works in every market. Okay. So in identifying the price of the particular security or a breakout at any particular point in time. Okay. So next thing, as we already discussed the features of an ascending triangle, we have already discussed this, the horizontal resistance, upward sloping support line. Okay. And the ascending triangle requires at least two swing highs and two swing lows to form its trend lines, and a breakout to confirm the price direction. To measure the target price after a breakout, measure the height of the triangle and add it to the breakout point. Okay, so we have already discussed that. So what we will do is we will move on to the next pattern here. Now, next pattern that we're going to discuss here is the descending triangle. Okay. So what is a descending triangle? Let's again go in the same way. The characteristic of the pattern. Yeah, someone has any question? Someone has a question? Okay. Okay, so the characteristic of a descending triangle is it is usually a bearish formation. Bearish formation is the market is in a sell mode. Okay, it generally appears in a price of the security has fallen down like here, from here to here, exact movement. It's moving up, coming down. It's not breaking the previous high, but it is coming down, going up, not breaking the previous high. And at the same time, it is also not breaking the previous lows. In real market instances, this is how it looks like. Okay, this is just a line chart. If you see the candlestick chart, you will see the real life instances of this is of a particular security. Okay. So why added a candlestick chart is to give you a real life, real market chart analysis of this particular triangle. Okay. So what happens is this is called as the downward sloping line, and this is called as the support. Okay. This is now becoming a resistance and this is becoming a support. So what happens is technical traders will identify a point below this. If it is going, they will, based on other factors also like volumes, they will confirm whether there has been a breakout of this particular pattern. So if you see here, the price is actually coming down. So trader would actually enter at this point. Okay. And how do you calculate the profit is important here now. Again, what you would do is take the highest point of this candle from A to B and put it over here. And if suppose this point is 100 and this point is 60, you take a difference of 100 minus 60, which is 40. And once you confirm that there has been a breakout of this particular triangle, you put if 60 minus 40 is your target. Clear? Guys, all good? All going over the head or your understanding, just let me know. Is the session interesting? Guys, at least give me some responses so that I know if you are hearing or not.
Yes, sir. We are understanding.
No, sir. Actually, session is interesting.
Sorry?
Session is interesting, sir.
Interesting. Thank you. Thank you, guys. Thank you so much. At least even if 2 or 3 guys can respond right, I will know that I'm talking to someone because the cameras are not on actually. Thank you so much.
Sir,
Okay.
I need to ask something.
Yeah, Pushpam, right? Yeah,
So,
please ask me.
yeah. So how we got to know that this is the breakout point?
Yeah, good question. So here, as I said, once the triangle has been formed, the triangle, you know the shape of the triangle. This is the shape of the triangle. The price is moving in between, within the triangle boundaries. You see here, if the price has moved below this level, it has moved out of the triangle, correct?
Sir.
Yeah, so see my cursor, I've put my cursor at a point which is beyond the triangle. Okay, so this identifies that there has been a breakout. So as long as it is as long as the price is hovering inside the triangle, there is no breakout confirmation. The breakout confirmation happens only after it moves out of the triangle, out of the shape. See, in the real life scenario, see here, this point, you can see my cursor. This is the breakout point. See, support, descending resistance, downward continues. Got it? Pushpam, right?
Sir, can you just put your cursor again? I'm not.
Okay, see my cursor is here now. It's on the right side now. I'm moving it on to the left side now. Got it?
Yes, sir, I got it.
Now you are clear, or you need me to explain something
No,
again?
I'm clear. Thank you so much.
Nice. Great.
Sir, sometimes we face the problem of false breakout. Like it
Yes,
just go down, execute the trade, and then again come back. And after that,
exactly.
it just go take the reversal. So how to identify when it is correct and when
Yes,
it is
Jyoti.
false?
Yeah, Jyoti, actually a wonderful question from a real market perspective. Thanks. I'm glad you asked this question. So what happens in the market is, generally what happens is, first of all, when you identify a pattern, you assume the characteristics of the particular pattern. Okay. As I said, this usually happens in a downtrend and usually a bearish pattern, okay, which is our assumption first. But no technical trader will wait before the breakout to actually initiate a position. Okay, so descending triangle also has to be traded with other factors. Okay, so this session is a basic session. We are not going into the complete detail of how to trade in a particular market, but as you said, how do we identify a false breakout? So you also have to take into consideration some other indicators like volume. Generally, if the volume is very high at this point, volume is nothing but the number of shares traded at this point is very high. That would mean that the selling activity is very high at this particular breakdown point, breakout. Okay. So
Okay, sir.
volume also has to be taken into consideration. And also what the traders will also do is like, once they identify that this has been, so even if the volume is high, example, okay, second day, see here you see, even if you had sold at this point, you see the market has moving up, but it is not able to breach this particular point. So as and when time moves on and the resistance, the support, the point which was a support has now become a resistance is not getting breached, the confidence of the seller will keep on increasing. So a trader will what he can do is wait for 2 or 3 days and then confirm that this is a breakdown or a breakout. I mean, in this, we call it a breakout also. That's fine. So Jyoti, is that clear?
Yes, sir. It's clear.
Clear, right? So what you have to do is basically either wait for 2 or 3 days. See,
So sometimes what happens, like we
yes,
wait it to sustain on that price. But
correct.
in that situation, I lose the opportunity to enter.
Yeah, Jyoti, but the
Right.
more important thing here is, if suppose this is 100 and this is 60, your target potential is very high. Your target potential is 20, 60 and 20. The difference is very high. And stock market prices will not move in one day from 60 to 20 because that is a big change in number. Okay. So what happens is, see, you see this price has gone from here to here in so many days or weeks. Okay. If this is a daily chart or a weekly chart. Okay. So that is how you have to be proactive in the market, either wait for 2 or 3 days. And the other thing is you also have to keep a stop loss above a particular level. Okay. If we think from a trader's perspective, you also have to keep a stop loss above this particular point. Okay.
And sir, one more
Hmm.
question I would like to ask.
Yeah.
Which chart duration we should use for getting the correct breakouts and correct indications?
Yeah.
It's
See,
yeah.
yes. See, it again depends. For an investor, you should look at a bigger time frame, maybe the daily chart or the weekly chart, or even the monthly chart. If you are an investor, okay, and you have very big targets. But there are different types of traders who are like intraday traders who will also be looking at lower time frames like 60 minutes, 30 minutes. So chart formations will either happen in 30 minutes or 60 minutes, but the reliability on a higher time frame is more than a lower time frame. Okay. So if you are an investor, I would suggest you look at a bigger time frame, like a daily chart or a weekly chart, to identify these patterns. Okay.
Okay.
Am I good?
Yes, yes. Got it.
Yeah, thank you. If you have any
Thank you.
questions, please ask me, guys.
Thank you.
Yeah, thanks, Shruti. So next, again, we have already discussed the features of descending triangle. Descending triangle is a bearish chart. Again, we have discussed how to identify the target from the breakout point. Okay. Next, again, we would discuss one more important pattern, which is called as the head and shoulder pattern. It sounds funny, but a very important a very important pattern where people make good amount of money, provided they understand the patterns, the characteristics, and the targets, and when to enter, when to exit. Also, how to use this pattern with other indicators to get the additional confirmations whether this pattern would work or not. Like Jyoti said, this might be a false breakout. So in that scenario, you have to be very experienced to know that patterns are complemented by other indicators also. If two things are seeing bearishness, then you can rely upon that. If one indicator is saying no, it's not still a bearish one, you should wait, then you should wait. Okay, for that confirmation, which Jyoti pointed out very rightly, that there can be false breakout. Okay, so in those scenarios, you have to be very careful. Okay, so head and shoulder, why we call this as a head and shoulder pattern is because here there is a shoulder, then there is a head, and then again there is a shoulder here. Okay, so again, this is a real life example here, a shoulder, a head, a shoulder. And let's again understand the characteristic. What is this head and shoulder pattern? This is a reversal pattern, which usually happens at market tops. Okay, market tops, I mean, when market has risen drastically or exponentially and consolidated for a while at the top. Okay, so you see market uptrend. You see here, there is a line here called as an uptrend. Market is moving up, coming down, moving up, coming down, and this high is the higher high, and this is the higher high and higher low. The perfect characteristic of an uptrend. But you're identifying a pattern over here. Okay, so how you segregate yourself from a retail investor who is not very well versed about the stock markets in your investing journey? Your fundamentals at one side. Also, you'll have to look at some of these patterns to actually know what is happening in the price side of that particular security. Okay, so here you see this line is called as a neckline. The price is going up, coming down, making a new high, then coming down, but at roughly at the same point. Okay, then going up slightly above the shoulder, I mean slightly higher from the left shoulder, coming down, taking support at the neckline. Garima, can you please mute? Garima Budani. Yeah. Okay. So here, Garima Budani, can you please mute yourself? Guys who are not talking, please mute yourself, please, so that others don't get disturbed. Thank you. So here in this pattern, you see the price is moving up, coming down, making a new high, coming down and roughly around the same level, then going up. The shoulder 2 is slightly above the shoulder 1, coming down, taking support at this point. Okay, so now this line is called as the neckline support. So you can visualize a human being and the shoulder, the head, the shoulder, and this is the neckline. Okay, so this perfectly resembles a human head with the neckline. Okay, so if I may say that. So how the characteristic of this particular pattern is, this is a bearish pattern, usually a bearish pattern at the market tops. Okay, so this generally helps to identify that the market has topped out and is likely to come down in the coming days. But you will have to be very cautious about waiting for the breakout. See, like the price has to break below the breakout zone. And also you will have to, Divyesh, have you done something over the PPT? Okay. So here again, you will have to wait for the security to break below this neckline support in order to either sell your positions or initiate a short selling activity. Okay. So this is the point where the breakout is actually happening. See, if you see the price has come down, then if suppose if we had sold here, you should not get panic as long as the neckline is being resisted. Okay, the neckline is being resisted. Again, you see a bigger fall here. Generally, what happens is if someone sells over here thinking that there is a breakout, but is not aware till what point it should go or not, price has actually moved slightly higher, but the support level has now become a resistance level. Okay. So if you see here, the price is actually crashed further lower. So how do you identify the target of this particular pattern? You take the height from the head to the neckline, this red line which you see, and you put it over here. If suppose this is 500 and this is 350, the difference between 500 and 350 is 150. The support which is at 350, you subtract 150 from this 350, which is 200. So that is your target. Got it, guys? All good? So again, we have discussed the features of head and shoulder patterns in technical analysis.
So actually I had a question.
Shreyas, yeah, sure.
All right, so can I just go back to the previous slide?
Yeah.
So let's assume that we are already in a long position before the head point. So how do we find out that it's going to be a bearish move after that? So like if I'm already having stocks in my hand and I'm already in a trade and suddenly the stock market is going to have this head and shoulder pattern and it's going to turn bearish. So how do I identify that point and how can I be cautious enough?
Okay. So Shreyas, your question is you actually have bought at the head point. Okay. That's what your question is, right?
No. I've bought before. Okay.
Okay.
Where the line starts.
Okay. Imagine you have bought at this point, which is around 250. Okay.
Yeah.
You bought at 250. Okay. You bought at 250. And as I said, the characteristic of a head and shoulder pattern is it is a bearish reversal pattern, usually at market tops. Okay. So if the market is topping out, that means that market has already rallied a lot before topping out. It's not like the price moves from 200 and 250, then it tops out. It must have, and again, taking into consideration the time frame that you're using. If it is a weekly time frame or a daily time frame, then it again tells you how much price the stock might have moved. Okay. So imagine Shreyas has bought a stock at 250, which is this point, and Shreyas' query is, how do I identify that whether the market is topping out and there is a head and shoulder pattern which is being formed? Okay. So what you can do is, Shreyas, is if you are not very sure whether a head and shoulder, you are not going to wait for head and shoulder sometimes. What you do is you see this line, the higher high formation has actually got broken here only. Shreyas, you're there, right? So this is an uptrend. This is an uptrend. The initial sessions, I mean, the initial slides that we discussed is a higher high and a higher low is a characteristic of an uptrend. So what happened here is, imagine this is 500. Shreyas bought a stock at 250. So Shreyas says, I'm not sure what is happening. I don't know. I can't imagine what pattern is being formed and when should I sell. So, but if you are aware that the uptrend has got broken here, this is the point which the uptrend has actually got broken. Shreyas, right? Sir. Because it has come below the upsloping support line. Okay. So this is the point where you might have to become cautious. Next time, see, you see the price is actually moved here, which is also the which is a resistance line here. See, the line that we have drawn here has got breached here. Again, the next time it goes here, it has become a resistance. So that is how you have to identify selling points. Okay. All right, got it. Because markets will not perpetually keep on going up. It has to pause at a while, come down, take a breather, then start its move. Okay. As and when the demand starts to pick up. So basically what these head and shoulder patterns tell you is, when is the market supply coming in? At what points? Got it?
Got it, sir.
Sure. Thank you. Okay. So next, so we have already discussed the features of a head and shoulder pattern. Now, next we would discuss again an interesting pattern called as cup and handle pattern. Okay, why this is called as a cup and handle pattern is it resembles a cup with a handle. Okay, a teacup or any cup. Generally, we all have the habit of drinking tea, right? So a teacup and a pattern. This names might sound funny, but these are very important patterns. And this helps you identify future security of prices if you are good enough to identify the breakout prior when compared to a normal layman in the stock markets. Okay. So here again, I've put two charts. One is the line chart and one is the candlestick chart. The candlestick chart is a little blurred because I had to take a bigger time frame to put it over here. So you see here, the price is actually moving up. And first of all, yeah, the characteristic of a cup and handle pattern. What is the characteristic of this pattern? This is usually a bullish pattern where the prices are actually moving up, coming down, forming a rounding base. You see a rounding base here. I have put a rounding base here. Okay, this is the handle. This is the rounding base and up a handle here. See. So when prices start moving above this line, that is when investors start feeling bullish about this particular security. Again, there might be a lot of noise happening at this point. It can be like going, it can be a fake one, it can come down, it can go up, come down, because market comprises of people who have different mindsets. Okay. Some might think this is a breakout. Some would think this is not a breakout. This is a fake breakout. Let's sell. Okay. And some would think this is the best point to sell. If I bought it here, this is a good time to sell. So that is how this point can be a very volatile phase. But as you combine this with your indicators like higher volume and supported by your other indicators, you are comfortable. See here, this price has actually moved up, come down, and eventually moved higher. And how do we project the target? Okay, the target is nothing but this is the resistance line. The distance between the resistance line and the circle base here, if suppose this is 100 rupees and this is 30 rupees, you take the difference of these two, which is 70, and add to this 100. Okay, the 100 is nothing but your resistance line. So 170 is your target. See, the price is actually moved up. And guys, a question to everyone. Can anyone guess what chart am I looking at? This one? I will give you a few hints. This is one of metal stocks, not stock, sorry. This is one of the commodities actually, and preferred by Indians who are not in the stock markets, who don't prefer stock markets, prefer this particular commodity.
Gold.
Perfect, Jyoti. Ek claps for Jyoti, guys. Perfect. Okay. So this is the USD chart of gold. You see here, if someone just knew this pattern, would have anticipated a deadly move on the positive side, I would say. Okay. So this is roughly around 1900, I believe, this resistance. And this is somewhere around, this is not marked here, but I believe this is around maybe this is around 2000, and I think this is around 1200 something here. Okay. If someone is smart enough to identify this pattern, being a technical analyst, what he would do is he would buy above this point. Okay. And keep a stop loss below this point. I mean, stop loss is your risk management. That's completely different story. Let's only focus on the basics now. Okay. And now you know what the price of gold is. If you see, the closing out is around 2646, and this point is somewhere around 2000. This and I have nothing. I mean, you can clearly see how good this pattern has actually worked for gold. And have you heard people talking about cup and handle pattern when gold was breaking out? I mean, no one talks about this because people who are actually doing it right will just make money, move out, and no one would speak about this. Ye hua tha, wo hua tha, and stuff like that. So people who look market from this is how you look the market from a different perspective. Okay. I mean, different in the sense you add your fundamentals to your technicals here. So that is what I'm trying to say. Okay. There might be lot of other factors which has caused this to happen, but from a technical perspective, this price point has got breached and it is almost doing the target also. Like 2600 ke baad abhi chal raha hai. It is moving. It is already moved 600 points from the breakout point. Okay.
So
Yeah.
I just has a I just had a question. Like recently, if I'm talking about a particular stock, ITD Cementation, like they had an acquisition by Adani. So I noticed that there was a drastic fall on 5th September, and it made a 20% move on Friday itself, and it almost resembles the first half of the cup, not the handle part as of yet. So can we predict like the stock market, the stocks for this particular companies are gonna go up? Like if you open the stock even now, you will see that it goes down from, let's say, 540 and moves up to 560 in just a matter of 3 weeks, and it
Okay.
is exactly a cup. So is that a good prediction if we talk about it?
Again, you'll have to see the chart in isolation. You have to see the chart first, basically. Okay, you will have to see the volume characteristics. You have to see, as you said, it resembles, because I'm not following Adani stock. And what time frame is that actually? Is it a lower time frame or is it a higher time frame? Because higher time frames are higher reliability. Guys, can you see my video?
Yes, sir.
Yes,
Okay,
sir.
okay. Thank you. So Shreyas, if you have identified something which is resembling the cup and handle, definitely you will have to look it into totality. Okay, so you have to see whether the formation is resembling the cup and handle, and you'll have to wait for the breakout actually to happen, and you'll have to see that the volumes at the breakout are really good enough. Okay, and if you're even buying it, you're buying with a risk management. Okay, you put a stop loss below a certain level. Okay, it's so this session is not about identifying a particular stock, whether it is going up or down. It is basically a theoretical session. But Shreyas, you can actually work more on, you can read more on this particular pattern, identify more things about this, and then you can have a look at the chart and just read out, and I mean, read more and understand the characteristics, and then you can take a decision on that.
Sure, sir.
And which stock you were saying? Adani. Which stock of
No,
Adani
no.
is that? Adani Power.
I'm talking about ITD Cementation. It was acquired by Adani, and the news came out on
Oh, I'm
Friday.
sorry. Okay. Fine. Okay. So you'll have to see things in total. You have to see different aspects, what time frame you are seeing, whether it is actually resembling the cup and handle. Because higher the time frame, more the reliability, and you'll also have to see the volume characteristics at the breakout. Why I stress on volume is, if people have a lot of interest, it will break out with a very high volume. Volume is nothing but number of shares traded at the breakout point. Okay. So when the breakout is happening with a very high volume, that would mean that the chances of it being a fake breakout is less.
Excuse me.
Yeah.
Yes, sir. Sorry,
Yeah.
may I know which stock was being discussed on the cup and handle initiation?
No, we were not actually discussing any particular stock. Shreyas had a question actually, where he had seen a
Okay.
particular
No,
stock
he
which was acquired by a
mentioned, the
particular
person who
company.
spoke mentioned about the stock.
You mean the one which you are discussing on the screen?
Not the screen, the one which he mentioned.
Shreyas, can you just tell which stock was that which you were discussing? He has mentioned in the chat actually. Okay.
Yep, I've sent it in the chat.
Yeah. I'm sorry, I can't see
Yeah.
who's actually talking, so because I've minimized
Okay.
that. Achha, that was Siddharth, right?
ITC cementation.
ITDC is what he is saying. Okay.
Sir, what is the time frame for this gold chart in this chart we are looking
Yeah,
at?
this I believe is the monthly chart. I'm sorry,
Okay.
I can't see who's speaking because I just minimized that
Jyoti.
window.
Sir,
Okay,
Jyoti.
Jyoti. Okay.
Yes,
Thanks.
sir.
Yeah, Jyoti, this is actually the monthly chart of gold, and I've taken the screenshot from investing.com. So if you have that investing.com app, right, you can actually download that and check commodities, gold, which will be by default in that particular section of commodities, and you can actually check
Okay.
the monthly time frame.
Oh, thank you.
Yeah. Cool. Okay, so again, this is the features which we have already discussed. Cup and handle is a bullish continuation pattern. It looks like a teacup with a handle. The cup is a rounded bottom formation that represents a period of consolidation. Okay. See why this chart is so ferocious, right? Because it has moved up so well, come down, and on the monthly basis, it has been consolidating for a long time. These are many candles here. Okay. So it's like a wounded tiger. Okay. A wounded tiger is more ferocious. So it has been in an uptrend, then it has come down. It has not, it has been in a consolidation phase. The market, but the good thing is there is a handle being formed here, and the moment it broke out, right, people were like surprised कि भाई gold इतना कैसे बढ़ गया, हमने तो खरीदा ही नहीं यार. That is what guilt comes in the mind when things are not being followed. Okay, so many of you might have got this guilt, right, कि अरे यार इतना बढ़ गया मैंने खरीदा नहीं. So in market ना, you have to be very proactive. You have to keep on looking at different charts. You should be knowing different things when only specific to price when you're looking into. Okay, all good. Guys, 1 second. Yeah, my chat window is not visible here. Surya Prakash, that was Surya Prakash, right? Before, who was asking? Okay, fine, nice. Siddharth Prakash, sorry guys, I just opened my chat window. So you have any other questions, Siddharth?
No, sir. I was replying to the question that which stock they were discussing about.
Okay.
This was
So
it was the previous
yeah,
message.
Shreyas actually had an observation from his personal perspective, so he was just sharing that with us. Okay,
Yes,
and
yes,
he
sir.
has mentioned that stock name there, I believe. Yeah, my screen is my screen visible? Okay,
Only PPT is visible.
can you see my PPT?
Yeah.
1 second, I think I have to minimize. Now my screen and my video is both are visible, right? Guys, can someone confirm if my PPT is visible now? And
Yes,
also
sir.
my video.
Yes, sir.
Okay,
Yeah,
thank
both
you
is
so much,
visible.
guys. Thank you. Actually, my screen just moved here and there, so I was like waiting. Okay. So next pattern that we are going to discuss is a rectangle pattern. Now again, we start with the characteristics of the rectangle pattern. Rectangle pattern is basically a consolidation pattern where prices move in a range, a fixed range. Before actually moving out of the range, it can be a breakout or a breakdown, the upside or the downside. Okay. So here what is happening is the price is actually moving up, coming down, moving, hitting the same price, coming down, taking support the same price, multiple levels where it has taken resistance, but roughly the same point. And when it comes down, it's taking support at the same point, at roughly at the same point. Okay. So this is a phase of consolidation, basically. Consolidation matlab markets are actually churning. Market mein there is no trend for that particular time being. Okay, abhi there is no trend which has actually been established. If there was a existing uptrend, it is a consolidation. It was a downtrend. Again, there is it's a counter move, basically not a counter move, but it's a sort of counter move. The market is not trending in a linear manner either side. This is more of a consolidation market. And how a trader basically trades this is a technical analyst would look is basically identify the target. Once he sees that this point is called as a resistance and this point is called as a support. So once the price breaks above the resistance line, what he would do is, because he has seen that the price has been hitting the ceiling and hitting the floor, I mean, what we call as resistance and support, which is the most common term that is used, you see that people will buy above this particular point because there was a fight happening between buyers and sellers. Buyer was buying here, seller was selling here. Buyer is buying here, seller is selling here. So eventually, who is winning here? The buyer. Okay. So now the point is to discuss the target of this particular pattern. Okay. So what you do is you take the height of this rectangle, which is the difference between the resistance and support, and add it to your resistance point. If this resistance is 1000 and the support was at like 750, difference is 250, which you will add it over here. Okay. So your target will be 1250. If you see this chart, the target is exactly, the resistance is appearing exactly at the target level. See, you see here, the target, it has hit the target and it has come down sharply. The earlier point, which was a resistance, now has become a support. Again, it has started to move up. Okay. All good? Okay. So again, we have discussed the features of a rectangle pattern. It is characterized by parallel support and resistance forming a rectangle shape, and it is used to identify periods of price consolidation within a defined range. Price fluctuates between horizontal support and resistance line, forming a rectangle shape. When the price breakout of the rectangle, that is when the traders, the technical analysts, will start initiating positions on that particular direction. Okay. Okay. So now that we have discussed a lot of patterns, prevalent patterns in the stock market, now it's time. Guys, you need a break or 5 minutes or we can continue. I think it's only 30-40 minutes that we are left with. I mean, my session would be ending in next 15-20 minutes, post which we will take more questions. So I believe it's okay. We continue with the next few slides, which is only 3 to 4 slides pending. Is that okay?
Yes,
Okay.
sir.
Yeah,
Sir,
perfect.
please continue.
Yeah, nice. So now that we have looked into different types of patterns, majorly continuation patterns and reversal patterns. Now it's time to understand some of the indicators in the area of technical analysis. So one indicator that we are going to discuss here is relative strength index. So as you see on the screen, relative strength index is a widely used momentum oscillator in technical analysis that measures the strength of a security against its history of price change by comparing the up and down days. This was developed by Wells J. Wilder, and the primary use of RSI is to identify overbought or oversold conditions in a security price. Okay, so I will show how the RSI indicator looks like. Before that, we will understand the aspects and characteristics of the RSI indicator. RSI indicator is, in a nutshell, is an oscillator which oscillates between 0 and 100. Okay, and this indicator is a very famous indicator among technical analysts to identify the overbought or oversold zones in a securities price. Okay. So guys, here, if you see this chart, okay. So before that, I would say any reading above 70 indicates that security might be overbought. That doesn't mean that there will be immediate selling happening in the market. It is a theoretical way of understanding that the security is getting into the overbought zone in the short term. And again, as I said, bigger the time frame, higher the reliability of these indicators. And because that is from an investor perspective, from intraday perspective, it has a totally different game. You'll have to look into different aspects. You have to be a complete expert if you are actually using these levels in intraday. You will have to be a perfect, total expert. So let's understand this from a bigger time frame. Above 70 is generally considered to be a overbought zone, and anything below 30 is considered to be a oversold zone. So what is a overbought zone? Overbought zone is the security has moved up and gained strength to strength over time. And now it is getting into a territory where it might start to either consolidate, or before moving up to the next higher level, the indicator might cool off, and then the price might start to go up or may come down. Okay. So let's take an example here. So if you see here, the RSI, this is the RSI indicator here. If you see 0, as I said, RSI is an oscillator, which why we call it as an oscillator is because it oscillates between 0 and 100. Anything which moves between two different points is called as an oscillator in the technical analysis. So 0 से 100 के बीच में इसका zone है, और यहाँ पे if you see the RSI is, and this is 70 and 30. So marking is very clear here. 70 has been marked as overbought and 30 is marked as oversold. So if you see here, the stock is actually moving up. Okay. Markets can be overbought for months also. Okay. Not necessarily that markets might, it doesn't mean that if the market is overbought, that means the markets will immediately start crashing. It is not that. You have to see the market in totality. Okay. See, market has been overbought for some time, but the moment the indicator starts to cross the 70 line from the up, I mean, this is a bearish crossover here. You see here, the indicator has indicated that it has got overbought. Now it is becoming weak because it is now moving below 70. Okay. You see the price is still roughly around the same level, but eventually it has fallen. See, eventually it has fallen. Your indicator was indicating that it is getting overbought, and now it is showing a bearish crossover and a move from the top to bottom. The indicator is a good implication. Good indication that the prices will start to come down in the short term. Good. And see here, it was an indicator which helped you actually to identify that the security would actually come down in value in the short term, whatever this time frame is. Okay. And here, if you see, it has come below 30. And the moment it started to move up, the price is actually started to stabilize here. Okay, this is not a complete chart over here. We don't know what has happened next because I've taken only a portion of the chart. But this is how you understand and read a RSI indicator. Okay. Got it, guys? Interesting. Guys there?
Gant. Definitely.
Yeah. Okay. So next we would understand what is volume. I have used this term a lot in the last half an hour, but let's understand volume from a perspective of investors. In stock market, volume refers to the total number of shares traded or contracts traded. Contracts we generally say when we talk about derivatives contracts, futures and options contracts. And when we talk about equity, we call it as shares. Okay. So for a specific security during a given period, it's important metric for traders and investors as it shows the level of interest and activity in a security. So like Jyoti, your question of a fake breakout and how do we avoid that scenario. Important thing is you have to understand that volume component also at that particular breakout. That shows the sentiment. Okay. So the sentiment of traders, whether they are really bullish at that point of time or not. Because if a breakout happens with very less volumes, yes, definitely there will be some kind of either confusion or people won't believe that particular breakout. So volume is a very important component, very important metric for traders. Okay. So high trading volume often signifies strong interest in a stock, which can be due to news earning reports or significant events. Okay. Sometimes you might see if a particular stock is trading at 500 and trading on average volumes on a particular day when there is a particular news about a particular stock that it has delivered excellent results, it has got good projects. You see that a lot of people who are waiting on the sidelines might see this as an opportunity to buy. Okay. So that stock shoots up to 550, maybe a 10% move. And if the average volume prior to that for the last 14 days was like 1 lakh, on that particular day, it moves up by 5%. I mean, 5 times of that average volume. That is a very good indicator that people have shown a lot of interest at that level. They have found value in this particular stock at this particular level from where it has moved up. Okay. So volume is also used to confirm trends and indicate higher volatility. Okay. So let's see the volume chart here. This is a Coca-Cola company chart, which is a example which I've just taken. I don't know which year and stuff. This is a random chart. Okay. So here, if you see the price action here, price is like moving up, price started to come down. You see here the volumes are like average volume. The volume is like roughly close to each other on this day till day. Okay. Suddenly you see there's a spot in volume. Okay, which is really high compared to the previous so many days. Okay. Okay. So if a trader who is looking into the security would see that, again, you have to see that in totality. Okay. Like someone who's a trader who understands different aspects of the market, he would see that this candlestick is also a hammer candlestick, which is actually a bullish reversal pattern combined with your volume candle. It gives you a double confirmation that there's a high probability that the markets might reverse. Okay. So someone who is actually like short at this level, thinking that markets might fall, he would start covering his positions at this point. Okay, to be on the safer side, and smart investors actually do that. Okay, so you see here, this volume is really high, combination of a hammer pattern and also a break above that particular level of the high, and see the market has actually moved up nicely. See, this was around $43 something. It has moved up like $46. Okay. So 43 to 46 is a nice move, around 8%. Okay. So this is how you identify in the stock markets the interest in a particular security. This also you get to know a lot of times institutional interest also based on the volumes. A lot of institutions also trade in the markets directly. So apart from the block deals and stuff, so you also get to know a lot of times based on the volume of a particular security whether a stock has that interest from investors, and other way around. This is on the buying side. The other thing is, if a stock is going up from 100 and it has gone to 1000, sorry, let's take an example. The stock has moved from 800 to 1000. Okay, with average volumes of like 1 lakh per share daily. Okay, at 1000 it has crashed down to 900 on 10 lakh volume. That shows that people are finding no value at 10,000 rupees. That's why they have sold bulk in heavy volumes. So that is a way of understanding that the stock has a very strong resistance at 1000. Okay, so that is how you identify. On the bottom side, you see this particular candle. On the other side, you see that because of the volume is very high at the higher level, during selling, there might be institutions who might be selling it. We don't know. This is just a theoretical way of talking about volume. Okay, guys, all good?
Sir,
Yeah.
apart from this volume chart, can we have any other indicator also for volume? This chart, I'm not able to understand this chart generally.
Yeah.
So any other?
Okay. See, volume, yeah. See, volume also has other, in volume you have on balance volume, different stuff. But here, if you see, volume is basically nothing but the number of shares traded or contracts traded. When you do it in futures and options, it is called as contracts. When you do in equity markets, you call it as shares. Okay. So number of shares traded, a number of contracts traded is called as the volume. Okay. So what exactly do you want to understand, Jyoti? I just want to know that, because here, if you see when I said average volumes here, suddenly there's a shoot up here. So we are trying to understand the basics of the volume structure here.
So there is a consolidation. Again, there is a shoot, but again there is a consolidation. So how to
yeah,
make decision on the basis of only one shoot and one in particular one candle? We cannot
correct.
reach to any decision on that.
Exactly. So again, I would stress that only one thing is nothing. I mean, only one thing is not you have to see always. When I was telling about this volume, I also said that this is a hammer pattern, which is
Yes.
a sort of a reversal pattern when the markets are in a downtrend. Okay, and the market has actually closed above this hammer pattern, and the next time markets are retracing, it is actually not going below this hammer. So that is why we are discussing only volume here. But out of curiosity, I have also told about that characteristic of a candlestick here, which is a reversal pattern. So as a technical analyst, you will have to be, if you are an experienced technical analyst, you will have to see the charts from a way that others don't see it. Okay, that is how you get to know whether the price will go up. Okay, that actually comes with experience. Because I was discussing only volume, I just, from a layman perspective, I try to explain a scenario. Okay.
Okay.
For you to understand complete things about the stock market, you have to get those experiences. Okay. Which happens in the market. Okay.
Okay. Sir.
So, okay. Thanks, Jyoti. So
Okay.
next thing is we will discuss about MACD, the moving average, convergence, divergence. This is also a popular tool in technical analysis to identify changes in a stock price's trend. It's a component, its key components include MACD line and the signal line, and a histogram, which visually represents momentum. Okay. So MACD is nothing but moving average, convergence, divergence. Key components of this indicator are the MACD line and the signal line. So MACD line, I will give you a very simple explanation on this so that people don't get confused with too much depth of this particular indicator. MACD line is actually derived from the 26-day moving average and the 12-day moving average. You subtract your 26-day moving average from your 12-day moving average, and the signal line is nothing but a 9-day EMA of the MACD line, which is a smoothened form of the MACD line. Okay, the signal line. So MACD line, how do you use that is the MACD line crosses above the signal line is considered a bullish signal, while the MACD line moves below the signal line is a bearish signal. So let's see visually how it appears. So this is a chart. Okay. So the blue line that you see here is the MACD line, and the other color which is here is yellow color, which is a signal line. Okay. So let's see how the charts are moving here. The chart is actually the security is actually moving up, 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 up. It has briefly come down, but no indications of a price wise change. I mean, a trend has not still changed here. Nothing, because short counter move doesn't mean that the trend has changed. But if you see here, MACD line, as we discussed, the MACD line crossover from the signal line from the top is considered bearish. Okay. So you as a technical analyst would identify that, oh यार यहाँ पे तो MACD ने signal line को तोड़ दिया है, तो we have to be cautious. जो बंदा यहाँ पे खरीदा है, ठीक है, और उसने यहाँ पे नहीं बेचा है, तो अगर उसको पता है कि MACD ने सिग्नल लाइन के नीचे क्रॉसओवर कर दिया है, तो he will be cautious. See, the market has actually gone up, but it has not reached the previous high. ठीक है, तो यहाँ पे क्या होगा ना, वो जो बंदा स्मार्ट है, टेक्निकल में देख रहा है, मतलब इंडिकेटर्स फॉलो कर रहा है, उसको लगता है कि अगर मैंने यहाँ पे बाई कर दिया भाई, यहाँ पे बच के निकल लो, यहाँ पे मार्केट शायद कुछ यहाँ पे टर्न दे सकता है। तो आप देखो कि मैकडी में जिसने फॉलो किया यहाँ पे, उसको और भी थोड़ा प्राइस मिला है ऊपर, निकाल लिया होगा उसने अच्छा, क्योंकि मैकडी का क्रॉसओवर बेरिश है यहाँ पे। और मार्केट आप देखो यहाँ से 156 से इट हैज कम डाउन टू 140, which is a significant move if it is in terms of dollars. Okay, $16 का difference is big in stocks. Okay, यहाँ पे 156 it has come down to 140. Got it, guys? And the next time, see, यहाँ पे देखो, market is like consolidating again. MACD has crossed over above the signal line, which is a bullish signal. अगर आप क्रॉसओवर पे भी नहीं लेते हैं ना, अगर आप यहाँ पे भी समझते हो कि मार्केट ऊपर जाने वाला है, यू हैव अ कंफर्मेशन की प्राइस यहाँ से अभी ज्यादा गिरने वाला नहीं है. That is what this chart is saying. You see the confirmation here. The MACD has given a bullish crossover above the signal line. It has moved up, and market has eventually even breached the previous high. 156 का high भी break कर लिया. Even if you have bought 144, 145, you still, it depends on how you book your profits. I'm saying it went to 160 from the chart, from a theoretical perspective. I'm saying it again depends your execution. आप कब निकाल रहे हो, how do you, because see, यहाँ पे देखो, आप यहाँ पे भी अगर आपने खरीदा है ना, यहाँ पे कहीं पे, यहाँ पे मार्केट गिरा है, यहाँ पे मार्केट has come down. Security has come down, but the MACD is still bullish. It has not breached below this signal line. So this could have been a indication for someone who has not entered at this point कि यार अभी तो MACD में अभी तक confirmation नहीं है, चलो let's attempt a buy here. Who is a trader? तो आप देखो यहाँ से इतना बड़ा gap up it has given, it has moved, and eventually when it has breached that 156 का जो previous high है, it has almost gone to 160. So you are making 140 से 160 सीधा. So that is how you use indicators. Okay. So this is the significance of knowing these indicators. See, technical analysis is a very huge topic. What I discussed today is just a bit of it. So आपको, you have to be in order to like, अगर आपका काम to identify securities है, if this is something which will help you in identifying a good price, this is something you should be knowing basically. So this is the last slide, guys. Thank you so much. So the last slide is thank you. So any queries that we have, thank you so much, guys. You've asked a lot of questions, and actually this was a very interactive session. I'm really happy about that because I got to answer a lot of questions while going through the slides. So this is the way that we conduct sessions. Really nice. It keeps the speaker also motivated to give the best out of his scope. Okay. So yeah, I also have another 24 minutes in the session. So people who have any questions, right? Yeah, we can. So Maurya is still there. I thought Maurya is not there.
Yeah.
I just opened my screen here actually. I was not seeing this screen actually. I was on my PPT place. Okay. So we are open to questions now.
Has any questions? I know you have been quite active during the sessions and you have been asking the questions continuously. But still, if you guys have any questions, feel free to ask right now. Any specific questions upon equity research report on the technical aspect? Or you can also ask him questions upon the current session. You can also pose in questions upon CMT as well. If you want to become a CMT in the near future, you're planning to give that exam. So like any questions in terms of technical analysis, it's an open forum. So feel free to ask any of the questions.
So guys, can I ask you questions?
Yeah, maybe you can pose a couple of questions for them. Let's see like how much they have learned.
Yeah, no, I just wanted to know how was the session, guys? Like, did you find it interesting? Did you find it useful? Did you feel like this will definitely add value to what you're doing currently? Guys, please.
As you can speak up, you can speak up. Now it's time to unmute.
Yeah.
Yeah. We can go ahead with Jitam.
So good evening. So thank you for, first of all, it was quite an insightful session and you covered a great chunk of patterns right here. Sir, as Mike, I also have a question. First of all, sir, for me, technical analysis and all is quite new. I've been watching Maurya sir's classes and all. But down the line, how do you recommend, like, for a student like me, how should I start initially? I don't want to directly jump into investing and all, but I just want to grow slowly and gradually. I'm going through the video lectures of everything, but like taking time into understand the patterns. So how do you like? How should a person start basically? Because some guided me related to simulations. Some guided me that you should just not jump into it. They made me read those 9 out of 10 those SEBI reports. So how like one should start into this field?
Yeah. See, when you come to the market now, you will hear a lot of things from different people if you ask them. So, but the thing is, you need to find out the approach that will help you navigate the path that you want to move into. Okay. So always having a good mentor or good people around you who are in this field, connect with them. And about technical analysis, you are asking specifically about technical analysis, or is it like overall markets you're saying?
No, sir, I'm actually asking specifically to about technical analysis. Should I wait right now or should I just start learning at least?
See, learning should always be a perpetual, I mean, it should be a process that you should always be in. If something is of interest to you and something which will help you, you should always start it whenever you think you feel like. Should not be stopping. So may I know your
Okay.
background basically, like what are you doing basically?
So,
Are you
I've done my bachelor's in commerce
great?
and I'm a specialization in financial management and accounting, and thereafter
Okay,
directly jump into MBA. So
nice,
the
nice.
exposure related to this field is quite less.
Okay. So you are at the right age to grasp a lot of things because early it is the good thing. I mean, it's always good to start early, okay? And this is the age that you should actually start learning anything and everything that interests you, okay? You should not be waiting for anything. You should not be waiting for people to say what to do and not.
Okay, sir.
So
Thank you so
I
much,
would
sir.
suggest, yeah, I suggest you start as early as possible. If it is something that adds value to your area, your domain, and something which you think you can thrive on in the future. Okay, if it adds value, definitely you should start. Similarly, you should not be basically doing anything random just because others are doing it. You should do something which comes from your own conscious, like this is what I want to do. This is for generally, okay, general session, general thing which I'm saying. That's it. That was Jitam, right?
Yes, sir.
Okay, Jitam, thanks. Yeah,
Okay, sir. Thank you.
you're welcome.
Siddharth has a question for you. Yeah, Siddharth, go ahead.
Good evening, everyone. First of all, thank you so much for this wonderful session. So it was very informative. So I just wanted to know that, first of all, just to give you a background, I also trade. I'm purely a Bank Nifty and Nifty options trader, but I want to get into swing trading as well because I don't get too much time to trade intraday in college. So I just wanted to know if you have any recommendations regarding any sort of screeners so that these sort of patterns can be identified with much more ease.
See, Siddharth, the best way to learn is to have a formal education. Okay, if you have a formal education, you will not tend to miss something which you will realize only after 5 years if you have not done that. Okay. And also again, you are saying about screeners. Okay. So to identify
Yeah.
screeners, see, it's technicals is basically more of logic. Okay. So it is based on more of your observations and how you interpret data. So it is more of research work. Okay. So even if you want to have some, like you are talking about screeners that will help you identify these. So I
Yeah, for
don't
example, let's say I just want to identify stocks which are forming, let's say, a rectangle box or one of the patterns, so the ascending triangle or the triangle
Mhm.
patterns, right?
Okay.
So it's very tedious to go through every single stock and open the chart, right? So if there's any sort of screener, that can identify.
I am not very sure. If I would have known, I would have told you, but I am not very sure about whether there is anything such where any particular software or application would give you a particular pattern or stuff. You might get the different. See, there are screeners which will give you what is the current RSI level of this particular stock.
Meeting है meeting है
Yeah.
Swaraj,
Swaraj.
please mute yourself, Swaraj.
Siddharth, there are screeners that will give you a lot about indicators, like what is the current value of RSI, what is the current stochastics value, what is the current MACD level. Okay. I mean, there are a lot of other things, but and what is the moving average, whether there are a lot of screeners, but about different aspects of the technical analysis. But as for your patterns are concerned, I don't think there is any such screener which will help you identify from a list of stocks that this is something which is being formed at this particular interval of the particular security or not.
Okay.
There are
Okay.
screeners which will help you in other indicators like RSI. There might be websites that will give you directly कि अभी RSI कितना चल रहा है, 50 पे है, 30 पे है, 70 पे है. So
Yes.
that is, this will give you pivot points, they will give you Fibonacci and stuff. But about patterns, I don't think there is anything. I don't think anyone has built that as such, because मेरे उसमें तो नहीं है वो अभी तक. I don't think there is anything like that.
Okay. Okay, sir. Thank you. Thank you so
Yeah.
much.
आपको स्क्रीनर में वो भी मिल जाएगा, EDX का ट्रेंडिंग इंडिकेटर्स कुछ होते हैं, वो भी मिल जाएगा कि
Yes.
अगर वो भी होता है. बट
Mhm.
आपको ये स्पेसिफिक एंगल इज अ गुड क्वेश्चन. मे बी समवन इज बिल्डिंग, वी डोंट नो.
Okay. Okay.
वी डोंट नो.
Thank you.
Yeah.
Any further questions, anybody? Good questions by Jitam and Siddharth. Really helpful for the other audience too.
Yes, yes.
But if anyone else has any questions to put forward.
Yeah, really nice questions actually.
So all the participants, any specific questions you want to ask, we still have time. We can wind up early too, but if you still have any questions, you can just feel free to post forward. I really believe you guys enjoyed the session. It was completely off the fundamentals today. We usually, Srikant used to talk about the fundamentals like long-term investing. And today was a complete session upon trading, upon technical tools. So I really believe they got to learn something new. And that is something which currently we don't offer. And hopefully like we'll be offering it with you in the near future. A whole technical analysis compact curriculum.
Sure.
So guys, any questions? Anyone
Sir,
yeah,
I have a question. It might be silly, but like I try to implement, I try to learn these indicators, patterns. I try to implement, but it makes me more confused. End of the day. Instead, if I follow my intuition, that may give me a better insight or better result. But when I try to implement all these things, so I just end up getting confused. So, any solution or any advice from your end for like in such scenarios?
So Jyoti, just wanted to know, like, for how long have you been in the markets? Just to understand what phase you are in.
Sir, I have like I am in this market for almost 10 years, but I was not an active trader. I was into working in a firm which was dealing in the stock market. So we were not
Okay.
allowed to trade and all. So like fast, I would say like last 4 or 5 years, I'm trying to get into that, into
Okay.
deep into that. So that's it.
Yeah. So Jyoti, that's a common problem that everyone gets initially who has been in the market. People try out different indicators, think that they've got the holy grail, but then eventually when they start trading in the real market, it actually starts to backfire sometime, because a trader's journey is a lot of swings. Okay. A trader who starts as a novice faces a lot of challenges. Next, he realizes that it is not only the indicators that you have to follow blindly. There are many aspects to it. you'll have to understand the market from a bigger perspective. Indicators, you can best use indicators if you understand the trend of the market, the price action, and the overall structure of the market. Okay. So indicators are it basically complements your price. Okay. So price is supreme. If you understand price, you will be able to practice these indicators. So it all comes with experience. So I'm sure you may not have given complete 2 or 3 years in this particular domain. I'm sure that is
Yeah,
never.
it was on off, sir.
Yeah.
Sometimes not.
Yeah, that happens. That happened with me also initially when I was completely on off, on off. I was like confused, like whether this is when I backtest this works, when I do it in the real market, it doesn't work. So how do we rely on a particular indicator? So it actually comes with a lot of experience. It comes when you understand the integrity of the business. Okay. So see, if everyone follows a particular indicator now, there is a chance ki you might fail because you are not seeing something which a professional is seeing. Okay. So the best use of indicator happens with price action. So this actually will come with time and a lot of research. A lot of research you have to do. You have to do a lot of backtesting. So backtesting is very important in the stock markets. And the problem which you had is the same problem which I faced. Okay. And I also faced it for a number of years because I did not give a lot of time in for research. I was believing that this will work, this will work, this will work. It might work once, but the next time when it doesn't work, I lose the trust in that particular indicator. But the indicators are doing its work. The market is doing its work. But how you interpret the data with this indicator is what you should understand. Okay, there is something which you are not seeing, but a professional is seeing. So that actually will come with time, practice, and a lot of research experience that you would have to give for your trading activity or investing. See, I showed you a gold chart, right? I showed you a gold chart. Like, how many people would have spotted a cup and handle here? See, it took a lot of time actually. It took a lot of months to actually form that cup and handle. But the moment it broke 2000, it is somewhere around 2650 now. So if you are bullish from a lot of fundamental aspects, you could have added this particular angle to it as well. So that actually gives you a holistic perspective. So that is what, from a price perspective, a technical analyst would do. Okay. So there might be a lot of fundamental reasons for why, fundamental reason is what drives all this financial markets. But the price perspective is also what you can consider, which will give you additional confirmation of particular price, because the job of a technical analyst is to forecast security prices, whether it is going to go up, going down, sideways, as they say in Wall Street movie, right? No one knows what happens. So that is what technical analysts actually do. Basically, they know what is next, what is going to fall, what is going to move sideways, and just preempt the right moves, basically.
Okay, thank you.
Yeah, thank you, Jyoti.
Thank you so much, Jyoti, for the question, and Srikant for the great explanation. Apart from that, anyone has any other question? Any other new out of the box question for Srikant?
And before anyone asks any question, thank you, Maurya sir. Thank you so much for this wonderful opportunity. Actually, it was really good to have a session with your students here today, and we had a good audience, a lot of good questions, and what motivated more is their interest in understanding the concepts.
Correct,
So,
correct.
because I did not have the video screen on. I did not keep my chat on. I was just going through my slides, explaining people. But at one point, I started feeling that people are actually interested, and this shows the zeal that they have in the field, basically.
Yeah,
Thank
no,
you. I should thank Maurya sir for conducting a good session for you guys. Thank you, guys.
no, I completely agree, sir. I agree. Like in the initial part, we faced a bit of hiccups, like since people were joining in and like some unmute issues and different factors. But I believe after like 10 to 15 minutes, like things got comfortable. And they got comfortable in the session and they started to have that interest. And that interest, like you
Yeah,
tend to build for the students. A couple of
I
questions
am
that they
I'm
were
glad
asking
I'm
between. Yeah. Go ahead. Go ahead. Like you're saying something.
no, I'm glad people were there in the session and more out of interest than just because they had something new.
Correct. Correct. So they had a couple
Yeah.
of good questions during the session also.
Yes.
And
Yes.
that also made us alive, especially you and the other students too, to learn from their questions,
Yeah. Yeah.
their problems and queries. So that
Yeah.
is
Yeah.
something that was really great, I believe. Because usually what happens, people tend to ask questions at the last, and that laziness tends to pop up, like especially during a Saturday evening and a night. But they were quite curious during that whole session, and they keep on
Yeah.
asking the questions, and that was really good. So thank you so much to the audience also for being so
Yeah.
active, right? And again, you're getting a very good perspective. So if no further questions, I believe we can close the call because it's already, I believe, too late for everyone. And you guys can have in your dinner and enjoy your Saturday night, right? So I would just say thank you so much, Srikant, for taking out your valuable time, right?
Yep.
And hopefully, like we shall be connecting for like many more sessions in future.
Sure.
And hopefully coming up with a full-fledged curriculum as well for you guys. Like we'll be discussing that with you soon. Even the students can also go through the details. So that will come out very soon. Maybe like me and Srikant will connect with you all and discuss the whole of the curriculum details. Maybe after some time. So that is something we are working upon really together for all of you so that you guys can have a technical perspective also. Because I believe that having this fundamental knowledge might not be enough. We need to have the technical aspect also. If we want to build up a career as a portfolio manager or a research
Exactly.
analyst. So both the
Yeah.
perspective is very important ideally.
Yes. Yes.
So that is the thing. So guys, thank you so much, sir, first of all, for taking out your time. It was a very great session, a very valuable session. We really learned a lot. Even I learned a lot from you, right? Because I'm more oriented towards the fundamental aspect. I go towards more of like financial modeling and valuation and talk about stocks from the fundamental perspective and don't give like much of technical advice. So that was a brush up to my concepts too, right? And like really thankful for that. And of course, the students have also learned really great. We can see the good comments in the chat box. Guys, you can just pour in your comments. You can just unmute yourself and thanks sir also for all the good and positive notes that you have. So feel free to unmute yourself and pour in all the positive words, the words of wisdom, knowledge, and love for him.
Yeah. Yeah.
And because he took out his time on a Saturday evening, and it's very difficult to take out time on the Saturday evenings because usually we tend to keep sessions in mornings. And this time the students were quite curious about that technical part, and they were like available in the evening, and most importantly, you by taking out time in the evening, especially for like all of us on a very short notice. Right.
Yeah. Yeah.
So thank you so much for that. And surely we'll be connecting back very soon with all the students once again. And guys, I've shared his LinkedIn profile too on the chat box. You can feel free to connect with him on LinkedIn. Right. Feel free to ask me any of the concerns regarding the today's session about technical analysis, about CMT curriculum if you're planning to do in future. He'll be more than
Yeah.
happy to do it. Right.
Definitely.
And thank you so much, Srikant, sir. Thank you so much, everyone in the call. It's completely a pleasure to have you today.
Yeah. Thank you, Mojo sir. Thank you so much.
Thank you so much, guys.
Thanks, guys. Thank you so much. Have a good weekend.
Have a good weekend, everyone. Thank you so much. Good night. Take care. And here we close the session for today. Thank you so much.
Thanks,
Thank you,
guys.
sir.
Bye. Thank you, Jukan. Thanks all. Bye.